Hello and welcome to the trade setup. In this video, we are looking at Super Micro Computer. It is time for another update, and we are looking here at a 20% break, actually over a 20% break during the pre-market, as we have followed through perfectly within our main expectations of getting a strong breakout from the triangle we have been tracking in the previous video. Yes, we did outline that as we head closer and closer towards the apex of this triangle, the stronger the break would be expected to be. And you may be thinking, no, this has nothing to do with the triangle, this is all news-based, the smuggling of the GPUs into China, this is all that it is. And I would agree that this event triggered the sell-off, this triggered the break of the triangle, but it often is the case that when such structures occur, there is an underlying event that will trigger a breakout. And not only that, but trading within such a restricted area also allows much more positions to be added, much more stop losses to be available, and as the prices head lower and it reaches an inflection point from which a cascading effect is running, yes? The first levels of stop losses are getting triggered, which trigger further stop losses for other people, which trigger even further stop losses. So yes, there is truth that the news heads the trigger, but it doesn't mean that the technicals weren't suggesting this to be a likely outcome. The same way it would have happened if we had a breakout, and to be honest, that was actually a preference for us, yes? Based on the structure we see within this area, we had a slight preference that we would see a breakout of this triangle, not a breakdown, but this doesn't change the overall expectations. We have been preparing you, especially considering how well this structure has been respecting the idea of a triangle. We have been preparing you for a rather strong break, and yes, this is the result. Now, if you value having these roadmaps, these ideas, I would highly recommend to subscribe, as this is our goal, right? To provide the roadmap in the markets. Now, let's get through the whole story, because this doesn't really change our larger expectations. This is all according to our preferred scenario, really, at least from a larger time frame perspective. And here we are basically tracking a larger wave 4. And we had the possibility to have a wave 4 bottom in place. We still do have this possibility, but unfortunately we only created a 3-wave move to the upside. This is actually kind of a warning sign that we do not have a strong indication that we would see continuation to higher prices, and it is also a warning sign that we have a correction potentially complete in an orange interpretation where we have a 3-wave correction within a wave B, which can allow this pattern, this movement to the upside, to be considered complete. So, in our main interpretation, we are tracking this orange scenario, where we are looking to build still continuation to lower prices within a wave C. In this expectation, the ideal target for the wave C would sit at $9.4. Now, we do not need to get there. We could form a bottom before reaching such levels, but that is the overall expectation for this wave C, and it is a level it is drawn towards. Then, within the green interpretation, we are really tracking a reset of this wave B, nothing more at the moment, and sure, as I was saying, it is possible to have a bottom in place, it is possible to see a breakout, but I would need stronger evidence, stronger indications for this to be a more likely structure. So we continue primarily within the orange interpretation, and if we manage to get even a break below $23, the last level of support here in our green structure, we have even our next signal that this orange interpretation is in charge, that it is unfolding in a rather direct fashion. Now, we are in this orange wave C in the larger wave 3 to the downside. The ideal target for this wave 3 sits at $18.7, and we are looking to build an impulse in this pattern. So we are looking at an internal 1-2 strap here and a wave 3 that technically could still extend to lower prices. We have in fact even been tracking this idea, and now that we can safely track this entire correction as a wave 4 triangle, I really do not have any issues with considering that right now we are just building the wave 5 to the downside, in which we are looking to build a 5-wave pattern before we look for the next correction. Yes, we would be looking for a follow-up wave 4 once we have a wave 3 bottom in place. Now, Within this structure, before we move into the very small time frame, I want to highlight a very key region we have also pointed out in the previous video, but this is very much in line with the 78.6% retracement. So we are talking about the $23 level. It is the last level of support we can reliably track. It is a Fibonacci retracement, and it has structural support from this entire region in place, right? So we could be watching a support box basically at the levels between $21 all the way up to $25.5. So I am aware that we have already pushed beyond this initial level of support, of structural support, at least during the pre-market trading, but we do not really need to go any further than that to create a more substantial recovery. And as you will see in a moment, this structure could actually form a bottom within this wave 5 sooner than many may realize. Now, even as we may get a break below the 78.6% retracement, we do still have this structural support. And I'm not necessarily looking for this support to provide the entire reversal in a wave Y, yeah? Below the 78.6% retracement and getting a sustained break at the very least within that area would already shift the probabilities heavily in the favor of the orange interpretation, which even at this point is in charge. But we are focusing more on a potential relief rally, and for those reasons I will actually even change this support zone, this structural support area, to yellow, because this can work out. Forming a rally from this region can work out within either outcome. That doesn't really affect the overall expectations of the patterns, of the counts. So in this smaller time frame, in the idea that we have a triangle in this wave 4, I would probably have to track this probably something along the lines of an A, B, C, D, E. In this case, we could assume to have a 1, 2, and then this would be a wave 3 to the downside. It seems likely, based on the internal structure in this area, that this wave 5 is being formed as an ending diagonal. It is certainly possible to look for different interpretations for different types of structures, but I believe this is the most likely outcome, and we will outline in this video also a more bearish interpretation, but primarily this will be my focus. I will be looking even for a potential bottom to form quite quickly, at least within this internal wave 3 as the market opens, but there are possibilities that would allow even further direct extensions, because even within the idea of an ending diagonal in this wave 3, I could have an ABC structure, but just as well I could have an ABC structure, in which case in the wave C I would be tracking a 5-wave pattern, so I would have a 1, 2, 3, 4, and a 5 before looking for a bottom even within this wave 3. Now, I wouldn't consider it necessary to overthink this structure. If I really want to be looking for positions anyway, I would be considering the structural support levels we have outlined, and we will name them specifically again before we end the video, but I want you to be prepared for this structure to actually still extend to lower prices. We have a strong expectation that this structure would be building a 5-wave pattern, so I wouldn't be looking for a bottom to instantly form within this area. I would be looking for a follow-up correction in wave 4, and only with a break above the resistance levels for such a wave 4 can we really start looking for a push into higher prices and for a bottom in this wave 3 in orange. Now, I currently cannot give you the area of resistance we would have for a wave 4 as the market is not open. We do not have a bottom in this wave to the downside, so we would need to still let this expectation play out. But I did also want to prepare you for the idea that this wave 4 didn't need to have topped here within a triangle. Yes, the wave 4 could have topped here as well in a much simpler ABC pattern, in which case we could be looking at a larger structure to be forming to the downside in something like a 1, 2, and then this would be a larger wave 3 alone. We would then get a wave 4 correction and a wave 5 to complete the structure. Now, the fortunate part for this expectation is that we would be looking at a quite similar pattern. We would really only expect in that case, in that scenario, a 3-wave move to the downside within this wave 3 instead of a 5-wave pattern, and then we would be looking for a wave 4 and a wave 5. Well, there is practically no difference except for how large of a wave 4 correction we would be looking to build within such a pattern. Now, once again, we have the roadmap, but we cannot provide at the moment the levels of resistance. as this development is still ongoing. Now, for a recap, in the previous video we provided these trend lines to watch out for a signal that a break is going to occur. We did highlight that a break out of such a pattern is likely to have quite a sharp movement, yes? Could be either direction. We weren't going to predict in which direction we would see the breakout, but we would have known that it would be likely, yeah, typically, a quite strong movement. And we have added now the support levels to watch, from which point we could be looking for a more substantial relief rally. And let me also even add here a count for the interpretation that would allow the wave 4 to have topped here. Doesn't really change our expectations. We are just looking still for a very similar 5-wave pattern in the end. And the structural support levels I am watching for the most are specifically these lows between $23.6 down to $22.7, and the last one can still be used, $21.3, alright, but it's definitely not as relevant as the higher levels that also sit perfectly in line with the 78.6% retracement at $23. And for now, while within our ideal expectations, we are looking to build here a 5-wave pattern in this wave 5 in orange. I do want to mention that, of course, more bearish structures could be playing out. So while we do not know the full extent, the full gravity of this situation, we need to be flexible, but within our primary expectation, yes, we would be looking to form a bottom here in the near term before looking for a larger wave 4 correction to be still taking place. And for now, these are the levels, this is the trade setup. I hope you enjoyed the video, and if you did, don't forget to leave a like, subscribe, and if you enjoy our content and want to support us directly, check out our channel membership. And as a thank you for any of these actions, I would like to invite you to sign up to our channel newsletter, where you get access to our monthly top picks, where we identify for you high quality structures. The link for sign up is in the description, and it is completely free. Other than that, let me know what else you would like me to cover, and I'll do my best to do that in the days and weeks ahead. And until then, I hope you have a nice day, and I hope to see you in the next video. Bye bye.